Greetings, everybody. This is Jeff Scott. It's actually still the 28th, but by the time I put this up, it will be the 29th. And this is my weekend review. As I said a couple weeks ago, I'm probably not going to do this every week, but this is 3 weeks in a row because I had the time. What a market. What a market we've been in. I put here as my title, Breakout or Fake Out. I see signs that it could be both. I'm heavy to the long side as we go into the week, although I did take some short positions on Friday near the close, just as insurance, I guess I would say it. Email address, hgsidoc@gmail.com, and let's take a look at what we're seeing. Disclaimer, as always, this is for education purposes only. Any recommendations under the spirit of education, not investment advice. I'm a doctor, not a broker. Most physicians lose money with their investments. I am not affiliated with any software vendor or trading company. Tools demonstrate those I use in my daily trading. I have paid for all the tools I demonstrate. Trading involves risk. You and you alone are solely responsible for any investment decisions you make. I also would like to point out that I do talk about options from time to time. Even if you think you're an expert at trading options, you should be reviewing the options, investment console, documents, briefings, and warnings. In many people's minds, options carry a lot of risk. I like options because of leverage and I can control the risk. But yes, I too admit that I have options that expire worthless. And so you can lose 100% on an option trade. But when used appropriately, they can be very valuable in your trading. Many of you have been here before. I like to say that I'm a mixture of the foundation of CanSlim and the practicality of John Person. CanSlim is created by William O'Neill. It's a great book. Improved by Morales and Catcher, used to trade money for him. Taken to the computer and Better Than Market Smith, which is an O'Neill website that I also subscribe to, but even better, with Ian Woodward, Ron Brown, and highgrowstock.com, and also with some additional indicators. And then John is he's just really great at trading and a great guy. He traded on the options exchange, worked with George Lane, who was the founder of Stochastics. He's an author, trader, teacher, mentor. He's actually become my friend as well. These are some of his great books. I use his indicators, as you'll see. Van Tharp is money management, position sizing. That's my buddy George Lee, who I share the podium every year or so in Orange County or other places together. I have a lot of programs. This is frankly my webinar computer. That's the only reason I use it. It's 1080p. Everything else is 4K. So I don't even have everything on it, but I need TradeStation and or Thinkorswim. I like both. Genesis to me has some benefits from a charting and intraday scanning platform, but it's also expensive, and I know most of you probably don't have it. I won't be using it tonight except for a screenshot or two. HGSI is the best bargain in trading from an analytic tool. I'll talk about that for a couple of minutes and show you how I use it. EdgeRater supplements that. A number of websites with seasonality and other websites as well. Here's a website for HGSI. Again, I am independent. I don't get paid to say things about it. I bought the software when I started using it. If you go to it and you hit investing strategies, which is where my arrowhead is, and drop that down, you'll see my name and lots of videos. You'll also see a bunch of videos from Rob Brown. And he's got some really great stuff. And if you go here for the free 30-day trial, not only is it free, but George Roberts, the owner of HGSI, doesn't even ask for a credit card for the first 30 days, which is unique. Well, gosh, where are we? I always like to have an understanding of where we are. I mean, clearly we were sitting up here as we went into last week. The prior week, we lost some. It felt like the market might be rolling over. And then lo and behold, we have a great week and we take another leg up. I think perhaps there was a breather that nothing happened at the inauguration or the weekend thereafter with the marches, and that we're still here And there may be a lot of things that the market may actually like about Trump from a regulation perspective and from a investment perspective of building walls and infrastructure, and that's balanced by some of the unknowns. And it really felt this week that we were back in a bull phase of the market. No surprise, since March of 2009 when we broke out, we appear to be rolling over, and then we get another leg up. And it's been a long time since we've had a massive correction. It will happen someday, I guarantee it. I think that I don't know when, but I'll be looking for it and be prepared for it, as shall you. So, as the week started, and my thoughts moved more to the buy from the sell, I started getting bigger positions, buying stocks and calls, selling off a lot of my protection, although I did put some back on Friday. I don't mind losing money or a small amount of premium that it cost me over a weekend to have some VIX protection and maybe some puts on some different things. I also like, even in the bull phase, to find some of the weaker stocks and be short so that if this market does crash, I will have some cushion. But I am, as I said earlier, overweighted to the long side. So Friday was probably for me the least exciting day of the week. I think I finished down a couple $1,000s, which isn't a big day for me. Just to I'm not sure if I'm going to share it or not, what the absolute value is, but I'm up 17% since the first of the year, and I trade a big account. It was enough to buy myself a new Aston Martin, pay the taxes, and still leave extra money in my account. So it's been a pretty exciting year. Unfortunately, it's only the 29th of the year, so I probably should just pack it up and not trade the rest of the year and be happy with my performance. The challenge is this may be one of those super years. So I suspect I'm going to be a little bit more conservative than I was maybe the first 3 or 4 weeks. But wow, what a year so far. And I've got it documented. I actually have slides showing the numbers, but I think I'm more comfortable not showing you the absolute number. But if somebody pushes me, I'm happy to share that with them. Not that I should or it matters, because you're not paying me and I'm not selling you anything. But it does show that this type of trading can work, especially when the market is strong. Interesting, on Friday, energy, which has been strong, was weak. Finances, which have been strong, was weak. Industrials are perking around. Some technology stock, the semis, seem to be doing very well. Retail, soft. We'll see what Amazon is like this week. That's one of my bigger positions. Utilities, pretty weak. Interestingly, biotech and healthcare were some of the stronger groups. Gold up and down. The dollar was down. Gold is strong. Freeport-McMoRan actually missed earnings and is trading higher on the week. That's a really strong sign when you miss your earnings, and 2 days later you're trading higher than you were. Probably more macro than just the company's earnings. And the casinos, Wynn had some great numbers. I think that says good things about Macau, and that's good for Las Vegas Sands, MPEL, and others. So we have to get a sense of where the market is, and the little red nuggets there are Friday. Friday was a very, very soft, quiet day for me, and looking at the market on the daily, really gave back just a little bit. This is the E-mini futures. This is the Dow futures. These are the Russell futures. This is the NASDAQ futures. In fact, the NASDAQ was up on the day. This is the VIX and the dollar. So the NASDAQ is certainly the strongest market right now. The Russell, pretty much sideways, frankly, going back for weeks. This does not look like a market that's had a climax run and is way out ahead of itself. And that would be one thing to put in the bullish and can go higher camp. If the market's about to roll over and die, and I don't have evidence that that's about to happen, I would expect perhaps a little bit of a quick vertical ascent in the indexes, some shooting stars, and then the market would roll. That's not what you see here. VIX is low. We'll look at it on some other charts later, but the VIX is at a very almost historic low, getting towards a historic low, and it's at a place where historically the market has, and this is VIX futures, we'll look at the VIX itself, where the market has had moves, and the dollar has softened, although at the end of the week it picked up some. That was good for gold and silver, and frankly, a super strong dollar may not be great for the markets as a whole. Looking at the weekly stocks, even the Russell, which has been going sideways for a while, the futures are all bullish, and here's the VIX futures and the dollar futures. Now, one of the things I like in Genesis, I'll put 3 time frames of the E-minis, the NASDAQ futures, the Russell futures, the NYSE, and the Dow futures. And I just look for the green and orange arrows just to get a sense. And pretty much everywhere now, dailies are in a buy. Weeklies are only in a sell on the NYSE. And monthlies are in a buy on everything. So it just gives me a sense overall that the market is still strong. Now, what things do I look at on a regular basis that affect the market? One of the things I look at are interest rates. And I've got this one written at, I think it's at 2.5. And I don't know if this is 3.0, kind of try to figure out where is the sweet spot for rates. When the rates are down here at the bottom, it might feel good if you're taking a loan or if you got some variable interest rates on some payments, but it's usually down there because the economy is sucking wind. There is probably a point somewhere, and they talk about 2.6 fairly often, which is probably mid-range here, where the rates will start to impact on the economy, and you could get to a point up here, as we saw in the past, where rates could be high enough that they would actually hurt the markets and lead to the markets falling. We are in a sweet spot on the 10-year. We are buttoned up against 2.5% and failed, and we buttoned up against 3% and failed on the longer durations. So I would say that these are up off their lows. And again, that's a good thing because you don't get this without having some really tough economic news. Up off the lows, not racing to the moon, and if anything, relatively stable. And if you look at rates, if the rates are low, it's good for REITs, MLPs, utilities, dividend payers, and home builders. Rising rates are good for bankers and insurers. I will tell you that on my weekend review of my stock list, there were probably better looking banks and insurers than there were of the other, although there's still some nice looking MLPs and REITs. AD lines, I'm just looking for evidence of a divergence, and I'm looking, it's the spiders and then the AD line in white for, on the left, the Russell 2000, on the right, the Russell 1000. And prices and AD lines are not diverging. They're both going up. I look at the percent of stocks on the left above the 200-day moving average versus those above their 40-day. And, we're above midline on both, but we're way below points where you expect the market to have to reverse. So I see nothing on my breath here that would say that we need to pull over now. I look at my 3-month new high, new low, which is probably the best predictor I have of an imminent reversal in the market. When we get up to this line, every time we've got up here, we've seen the market give back something. We're well off that level. Again, no signal here of an imminent reversal. Doesn't mean you can't get one. Put some things in the negative column. If we keep getting higher prices in the market, why can't I get positive on the McClellan on either the daily or on the weekly? So both the oscillator and the summation indexes are diverging in my mind from the market itself, and that might be something to put in the basket of current buckets. We're at about 50-50 here, which is neutral, and we don't have a large percentage of stocks below or above the Bollinger Bands. For those that are new to me, take the S&P 1500, look at the Bollinger Bands of each stock in the S&P 1500. This tells me what percent are above the midline, what's below, and then this takes that 0 to 100 and creates 10 buckets plus a bucket if you're above the bands and if you're below. And we know that when the below or the above gets very high, there's a reversion to the mean tendency. Right now, these are neutral. The HINDY, Hindenburg Omen, is a indicator which doesn't fire often. And if you start to see a series of them, and we did see one in December, but a single one is not a big signal to me. There hasn't been a major market reversal in decades that was not preceded by a Hindenburg. Clearly, if you knew about this, you would have gotten out of the market in 2007 and avoided that carnage. And it wasn't a single, a double, or a triple. There was 5, 7, 9 of them occurring in a 10 to 15-day period of time. I guess the Hindenburg, I'm not going to go through the math here, is basically a mathematical analysis that is showing at the top, the professionals are selling it to the amateurs, us. Volume occurs, a lot of new highs and new lows. The McClellan and the weekly average of the NYSE have certain things they have to do. And when you meet all those criteria, you will fire a signal. On the left is the NYSE. That's the classic way of doing it. I did have some concern that we hadn't seen one in so long that the world change, and because of all the interest sensitive stocks in the NYSE, bond funds and the like, did I have to switch to the Russell 3000? I don't have an answer on that yet, except there's no signal. Market tone improves. This is the Woody indicator, and that would be this third pillar here. And what we're looking for is this is the signal on stocks, and you could see, I think it's on the smaller stocks and the NASDAQ, we actually went green here this week. So we went from a very bullish period after the election. Then we had some chop in here with some strength and weakness. And now it looks like the weakness is abating. We had a series of kahunas, which are bullish moves to the upside. And I would say it's not all and out bullish. This is what bullish looks like, green across, but it's a lot less bearish. So that's why I title it Market Tone Improves. And in fact, if you start to look at the sectors, we actually are starting to see some green in some of the S&P sectors. Now I'll put this one in the negative side. I like to look at the canaries, and we define the canaries as being, make sure I got this all the way. Yeah, the canaries are some of the market leaders, and we create an index of those leaders, equal weighted, dollar weighted index, and with the expectation that when we break out above to new highs, that would be bullish for the market. If we roll over, that would be bearish for the market. And just like canaries in the coal mine might give you a warning of something that's happening that's bad, we use this as an early warning system. Well, we hit resistance, whichever trend line you want to break, and we rolled over on Friday. We have a red candle high. That tells me we've got some trouble in paradise, and that has me a little bit concerned. I think you'd have to be out of the market to not remember or realize that Google earnings were a big miss. Now, the interesting thing is, after falling 2-3% overnight and thin trading, it ended up less than 1% down. Amazon made up much of its loss as well. But I think this canary index will be waiting this week because Apple, Amazon, and Facebook are about to report. Know your news and your earnings dates. On the left are some of the news for this week coming up, and specifically the big things that I would be concerned about. Looking at Monday, I don't see anything that's going to be, for me, a critical thing. Tuesday, there's a lot of things that might have to do with interest rates and bond auctions. There's an FOMC meeting. That is a big deal for us, for me and you. There's some PMI information. On Wednesday, PMI, manufacturing, construction, and then the FOMC announcement, which hopefully we'll be waiting to see. Not another rate increase, something to think about. I'm not anticipating that we're going to get one right away, but you never know. I think especially since the economy seemed a little light fourth quarter, if I remember correctly. We got some claims on Thursday, and most importantly, the monthly unemployment reports will be on Friday, February 3rd. I think the other side here is even more important. I highlighted some that mean something to me. There are a lot of big companies with earnings this week. And you got to know your earnings dates. You also got to know, are they before market opens or after market closes? It's a judgment call to hold stocks over earnings dates. It's bad judgment to not know when your stock's earnings date is scheduled. Now, if you have TradeStation, then you should be able to download. If you go to the forum and you look up the Guru has an indicator that will give you earnings dates. And then you could sit here and you could flip here and get a sense of what's coming next. CNX, Devon, Ocular, and this tells you when your earnings dates are coming, how many days out they are, and then it tells you what time. So I've got some earnings coming this week, and I may be having to do some playing with my portfolio. If you have Thinkorswim, I believe you can go to Market Watch, and I believe, let's do this real quick. I want to go to, sorry about that. All right. Let's go to my buy watch list that I was looking at. We'll look at this again. These are some of the stocks that interested me, and I believe if I right-click and go to Customize that they have a new thing here. And let's see, EPS date. And I believe this is a standard and not anything from me. That's not. Pretty sure there's an EPS date here, unless it came on one of my. I wonder if that is the date. Next EPS date. That's what I was looking for. So let's just add that and bring that up top. Put it right after the symbol. Hit OK. And now you have the same information in Thinkorswim. So it's telling me when your earnings are coming out, how many days to earnings, and that's something that's very important because, as I said down here, this is my quote, it's a judgment call to hold stocks over earnings dates. It's bad judgment to not know when your stock's earnings date is scheduled. So what are my thoughts about the market this week? Still climbing the wall of worry. Trump tweets will still affect individual stocks. The market seems to be ignoring the flurry of executive orders and an increasingly divided U.S. population. I think we're all aware of the controversial order about immigration and blocking the borders. It was already overturned by a judge today, so there'll be some interesting there this week. Market ignores uncertainty over Obamacare's successor, yet we don't know what it's going to look like. And the VIX approaches historic lows, which is kind of interesting. Now, the markets did break out this week with growth leading. We got a super low VIX. Is that a sign of complacency before the market shocks us? Banks worked last week. Steel, healthcare, and semis look poised to soar this week. And will Apple, Facebook, and Amazon disappoint like Google, or will they lead the next leg up? I think earnings are going to be extremely important this week. And by the time we get to the monthly unemployment report, unless the Fed raises rates, I think we're going to be dictated by these three companies. Usual agenda, top-down review, and onto the charts. And that's my toy I bought from my January performance. And like I said, I did highlight, show one of the best months I've had in a long time, 17% return. But we're not going to look at that any closer than show you my little new toy. All right, save that, close that. So now the next thing I'd like to do to get a sense of the market is to jump into TradeStation and just get a sense of the market. And so I go to my market divergence. I look at 5 things. Number 1, I look at the last person buy or sell signal. Buy is green and pointing up, sell is red and pointing down. Second thing I look at is the color of the paint bar. I know that's a elder impulse indicator. A green paint bar says the buying window is open. I can buy or I can hold. A red paint bar would say the opposite. I could short or I could hold. And a blue paint bar gives me full choice of any of the three. I look at where is price within the auto envelope. I don't get nervous if I'm rubbing against the auto envelope because a lot of stocks and indexes will stay and run up the upper or lower envelope for weeks at a time. When it's way outside, above or below, I know it's going to pop back in very quickly. I also look for little dots on top of price bars, and those would be MACD divergence, suggesting the market's going to turn down, or convergence if they're green on the bottom. And lastly, I look at my high jump bar, knowing that when it's above 90 to 95, that the index is extended and it's coming down. And then the sixth thing, I guess, I look at the bongos, the daily and the weekly on top. The monthly is on the third one. So let's take a quick look. Let's go to the S&P, the E-minis. Let me make this daily. Clean up some of those errors. There we go. On the E-minis, so what do we see? We see that they have a green arrow up. They're in a buy with the green price bar. That's great. They're not close to the envelope. That's great. They do have the red dots coming, but as you can see here, you can get the red dots for a long time, and you can either ease off by going sideways, or you could come back. And then we are nowhere close to the high jump, and everything is green below. We're in a buy on the weekly and the monthly. We do have a blue bar here and the red dots. So on a little intermediate time, there's some weakness. But I look at this, and it looks like it can still go higher. Doji, almost a low close doji there. I'm going to have to watch that. I think the markets are tired. I think the markets are going to come down. But I've learned to let them do it before, not just predict it. Because usually I buy too much protection and I pay for it. The Dow futures kind of look very similar. In fact, look identical. They're in a buy in all three time frames. You have blue paint bars and MACD divergence on the weekly. You're at 69%. I look at the NASDAQ futures, and buy signals green. Again, the MACD divergence on the daily and the weekly. It's been a long run. It's getting tired. There might be some divergence. And for example, just showing you the shortcut, I like the dots. I don't have to think. I'm into things that make my life easy at this point. So I want to, what do I want to do? I want to get this, and I want to get some trend lines. So everybody agree we got higher highs? I think so. Yet we have, let me get that. Yet we have lower highs on the MACD, hence the red dots are showing up here, and hence things that would suggest that this market might be getting tired. And lastly, the Russell, which should look a little weaker than the others. It's in a buy signal everywhere, but blue on daily and weekly, and does have the weekly MACD divergence. So I think that the short term is still strong. It is getting tired, and we'll see how long it goes before it gets too tired. But like I said, you can go a long time with those MACD divergence dots before they roll over. Take a look at the dollar. Dollar seems to have stabilized. It's had a buy signal come in on Friday. It's still in a weekly sell, monthly buy, and still got red weekly bars. So not very bullish, certainly mixed at best, but perhaps making the change to a more bullish story. The gold has improved because of the weak dollar, but it has started selling off. Daily sell signal in red, weekly buy in blue, and monthly sell in red. The gold will probably go up again someday. I'm not just sure if it's tomorrow. Silver actually looks a little bit better than gold. Let me see if I can put the silver in here. Insert blank row, and then do at SI. And you could see silver also in a sell signal, bi-weekly, sell monthly. And then I think the strongest, let's see if I can remember what it is. Let's see, increase, insert blank roll. Is copper HC? I can't remember. Nope. What is copper? Well, I'm not going to worry about it now. Copper has been really strong, hence why Freeport-McMoRan has been doing well. So, and then the other thing perhaps to look at is oil. Oil popped a green signal on in a buy signal on Thursday. It's in a weekly sell, monthly buy. Oil's been going sideways in a limited range for a long time. A lot will depend on how folks are they truly cutting back or not. Quick look at the sectors. XLV, new buy signal. As I said, healthcare might be healing this week. On my quick assessment, it is red, but in a buy signal on the weekly. It's in a monthly sell. So healthcare has been weak. Is now the time it runs. Financials, strong. As I said last week, I expect that was my title was, time to be in banks or something about banks, and they didn't disappoint. I think the market was only open 4 days last week, and they had a nice move. Let's look at the FAS. I might see it better here. Same thing, weekly, monthly, and a buy. XLY, discretionary, in a daily, weekly, and monthly buy. MACD divergence, so this one looks like it's getting tired. Technology, outside the envelopes. That's unusual. One expects it to go sideways and get caught up. It's got some MACD divergence, but it's in a 3-session buy signal. Notice the high jumps at 97%. This one's gone too far. It needs to pause to refresh, or it's going to go into melt up and then come down hard. Industrials also in a buy signal. Staples, a new sell signal on Friday. Probably see that with the strength in the market this week. Clearly, the staples gave some back, although longer term they're still in a buy, monthly in a sell. Materials had a great week. 1, 2, 3, big move up on Monday, and they are in a buy signal in multiple time frames at 90% on the high jump. Utilities, like staples, are in a sell signal, at least on the short term, and energy, a new sell signal. So, a mixed market, but clearly some strength in healthcare, technology, and finance, although, as I mentioned, technology is getting a little bit overdone. So, next thing I want to do is go into HGSI. Let's open up the warehouse view, and let's go into Best of Woodward and Brown, Major Markets Plus, and let's look at the T, which ranks price and volume 1 day more than 5 and a little bit for 3 weeks. Do the raw combo, and we can see the strength there in the Dow. Industrials, the transports, the NASDAQ, the semis, NASDAQ Biotech, NYSE, big NASDAQ. The weakness and volatility, bonds, dollar, and interestingly, the Russell 2000. If we look at the 5-day change, you can see the leaders were semis at up 3.5%, transports up 2.4%, the NASDAQ 100 leading of the major indexes up 2.1%, volatility was down 8.3%, gas was down, gold was down, bonds were down, and the dollar was down a teeny bit. Now, what I do wanted to show you is, wait a second. I thought there was another slide I wanted to show you. Let me see if I can find that. Did I? All right. I didn't make it over. I've got it down here. This is group performance last week. I look at performance between the 20th and the 27th. I look at my holdings. Now, this isn't a true performance because it's not really looking at protection, long and short strategies, nor is it looking at number of shares you have. But it gives you a sense where money is going. The S&P 500 was up 1%. It is a great week in the market when the S&P goes up 1%. Interestingly, the GAF All-Stars, which was the best of the prior week, didn't do any better than the S&P. My buy watch list was up 2%. I like that. And my own holdings were up 2.75. So my types of stocks did well. I do a lot like Market Smith 250, which was up 3%. And if you look at the IBD 50, was up 3.5. The HGS 100 was 3.26. That tells you that last week growth stocks ruled. That's cool for me because I like growth stocks. If I look at since the beginning of the year, using the fundamentals on the day that the period started, this is looking at, is that year to date? All right. This is looking at performance in the market from January 21st to January 27th. Now, this little gray light line tells you how many stocks are in each place. So I usually cut things off when I get between here and here. I ignore because the number of stocks are too low. So if you took those data points out, clearly it's gone up. The higher the ERG, earnings per share plus relative strength plus group rank, the better the performance. That's the way it's supposed to be if you like trading growth. Relative strength, the higher the relative strength, the better that you did. You look at EPS rank, didn't seem to matter. Accumulating stocks did better. So this is the good old days and kind of why I buy high relative strength stocks, and that's what's working here. I think I have another set here. I hope I didn't copy the wrong one. Yeah, I did the same thing twice. So here's how you do it if you have EdgeRater. I might as well teach you something. I'm going to open up EdgeRater. Now you have to have these warehouse views. And the warehouse views have all the fundamentals of your start date. So I'm going to go look at year to date. So let's open this up. And I'm going to go to Warehouse Report, change settings. And I'm going to browse, and I have a year-end 2016, and I'm going to look at this one here. And I'm going to go from the beginning of this year and I want to see it through today, or through Friday. So it's going to run it. Okay, I want to make sure I have all the stocks in it. Okay, done, 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 done. Now I'm going to hit run. Let's see what happens. This is what's working this year, and it may look a little bit different to what I just showed you. All right. Calculating gains. Interesting. From the beginning of the year, high ERG didn't matter, yet EPS rank and relative strength rank are starting to matter. So we may be getting to a more normal year. Interestingly, accumulation distribution on the last day of the year, those that were distributing have outperformed. So there's still some junk off the bottom. But if EPS rank and relative strength rank are starting to work, then I'm pretty excited. Save this where I made a mistake. And this is my... All right. Cool stuff. Now, to have done that analysis in an Excel spreadsheet and macros would have taken me the whole day. It's amazing how much EdgeRater has shortened my analysis time. All right, back here, let's take a look at the S&P 500. So we know that there were a lot of kahunas last week on Friday. We're going to switch to a cleaner view here, teach about my charts. My timing indicator that I developed with a couple of other guys is called the bongo indicator. I like to be long when the bongo weekly is green. I want to be out of the market when it's red. I'll alleviate a lot of the pain. These red lines here are from the Hindenburg Omen, and you could see we had one in November, one in December, and one in June. That is not enough to worry me. Let's go back to 2007. I've done this every time, so I hope you're not going to get mad at me. Look at October of 2007. You had plenty of warning here that all was not well in paradise. In fact, I could even go back, and I went back too far. Let's see. You had your first shot across the ball in June, where we had a number of these. A breakdown here at 1500 should have gotten you out of the market. And then you may have gotten suckered back in, and guess what? We did it again with this series here, breaking again below 1500. And where did it end up? Well, there's 891. This market went down in the 740s. So you had the opportunity, then it went down in the 600s here, have gotten out because of the HINDY. I watch for this because I know what it means, but we haven't seen a series of HINDYs in a while. Down here I look at my candlesticks. Overlaid on the candlesticks is an 8-day exponential in purple, and then in green is a 17-day simple, blue is a 50 simple, red is a 200 simple. Notice how convenient that the S&P likes to pull back to major moving averages. Notice that when a moving average is broken, it becomes resistance here, and on the way up, it might be support. These are kahunas. These are some indicators that we came up with that are momentum. So, looking at the S&P 500, breaking out to new highs, stalled the last 2 days, had kahunas on Wednesday, on the gap up day. Looks great, no reason that I'm running for the hills. It is starting to get a little extended, and that might be a concern, but right now I've got lots of support underneath the 8 and the 17 day, the 50 and the 200. No real signal there except to stay the course. The Dow, same story, nothing else to say. Bongo Weekly is green. The NASDAQ, new highs last week. Everything is green. Again, probably getting extended. And one of these days it will stop going up. It's currently at the high end of its trend line. But NASDAQ remains strong until it turns down. And then the Russell is the weakest of the bunch. You notice how it pulled back to the 50 and bounced, and then had a little bit of a flag on Friday. So, looking at the major indexes, I don't see anything that causes me to get out of the market. I am concerned about how long this run has been and recognize that it will end sometime. Hopefully I'll get some signals. The dollar failed up here, is right below the 8-day exponential. Notice the dollar is the first index that is now in a Bongo Weekly sell signal, which would be, I would think, negative for the dollar. Probably means we're not raising rates this week as well, because the dollar will be going up. If I look at gold, we'll see that it did have a nice move up, pull back. Gold's going to have a lot of resistance here. You saw how it was support for quite some time on the way down. And I like to see a break before I went all in on gold. I'm sure some of you, and maybe even I, will be playing some of the gold super ETFs, especially with the weekly Bongo Green. This is the gold miners. Let's take a look at gold itself. Won't be as strong if I remember correctly. Pulling back a little more, and not in a buy signal on the weekly. So it's the miners that look interesting more so than the metal. And then silver actually outperforming gold. Had a big day on Friday, a high close doji, but still in a weekly Bongo sell signal. I respect that signal. If I look at the VIX, the last thing to look at, the VIX here is really at a point where we got to go back years to find the VIX down to 10. So I think that on one, let's look at weekly VIX. And let's put a line here. So this is a prior one I put in. So there must have been a low there. No. Nope. All right, so let's put a green line because I don't know what that line is. Green. make it black so I can actually see it. All right, so this is on the weekly. And here is the weekly line over here, so let's extend it down here. I think you can see the point. This is really a low VIX. All right, it gets us to 2007, 10 years ago, before we saw the VIX this low. So the concern on the VIX is when it's low, it's only got one way to go. And when the VIX rises is when the market falls. So right now, complacency. It's got to get above the 50 before I get nervous. But if it launches above the 50, it's going to be a signal that the market is turning over. All right, so now I'm going to want to go back to my warehouse view. I'm going to want to go to 07, which are the top industry groups. You see we have 173. I'm going to look at the two-day force and get a sense of where the money is going. If I look at where the money is leaving, two-day force to the downside, energy takes the top three spaces, number 6. So 4 of the top 6 spaces are energy. Airlines sold off with American Airlines. Their costs are going up. Home builders' interest rates are going up. Construction down, probably interest rates are going up. Interesting, higher rates should be good for insurance. Bad for net utilities. All right, but let's look at where it's working. And this is a very short-term indicator. Semiconductors are super strong. I think the big beast is NVIDIA. And now I'm going to add some indicators to help me help you. So let me show you what I add. I added PSAR, sell in reverse. It's sort of a support resistance, I guess. When it goes below, it's supportive. When it's above, it's resistance. It's also a buy-sell for many people. I got my kahunas down here. I added pocket pivots here, Mobo breakout, squeeze, and Bible gap ups. This is the high jump, and these two green bars are the force, and then this is accumulation distribution. And this gray bar is one of the secret weapons of HGSI that's overlaying the index. So you can see how strong the index is. NVIDIA is one of the leaders by far. It looks like it wants to go higher. Had a kahuna on Thursday. Everything is green. Gotta love NVIDIA. It's still trading at a discount to its multiple. Pays a small dividend. Maxim had a Bible gap up on Friday. I would point out that Bible gap ups were the big performer last week. You would put your low below the low of the day, maybe give it a little bit extra, maybe pull it down to 44. It's got great earnings growth, and earnings are out, pays a 3% dividend yield. Intel, boring old company, but getting up to where it's had resistance before. That might bother me. That's not an impressive looking candle. It's going on a nice run. It looks tired. I probably would not be chasing it. Micron, I like a lot. Like NVIDIA, lower left, upper right, a couple kahunas early in the week. Everything is green coming out of a squeeze. In Broadcom, in a climax run appearing pattern, I have a position in this, and I actually lightened up on Friday after I saw that on Thursday. Doji after doji, after a run like that, it's hitting the top of its high jump bar. But what a great run for Broadcom, a bunch of pocket pivots, big volume, and its earnings are already out. So Broadcom, don't come out to March. So Broadcom is also strong. So I said semis are flying. I think maybe you can see why from that. Marine shipping, I don't get this group. This is the big leader on the ranking module, and that means a couple things. It meant it had a big price move. Not really. So it must be the volume. And the volume was only 2.075 million shares. But if I go back here, the volume was 12,000. I'm looking down here at the volume, 53,000. So 7 million, and then back to 673,000. So big volume came in. The last time it ran up is when all the shippers went crazy. It was stupid. Kind of looks stupid again. I don't see a whole lot of earnings here. I don't play these. I think it's dangerous, but might be a neat little thing if it runs back up to 20 or 30. That's a double or a triple. That's the leader in this group. Gas Log Partners had a Bible gap up. This is much more impressive to me. GLOP. and it's not overly extended. Had a Bible gap up, mobile breaker from squeeze and a kahuna, PSAR reversal, and more importantly, it pays an 8.6% dividend. If I had to buy one, I'm buying that one. Golar LNG, 9.4% dividend, lower left, upper right, strong pattern as well. And don't know anything about Costamare. So a couple of those looked interesting. Those dividends look awesome if you like dividends. Base metals, I mentioned Freeport-McMoRan. They missed their earnings, traded down, and then ended up the week up despite missed earnings. I think it's probably the earnings per share growth rate. I think it's copper pricing is up. I think it's issues with China. But this is a stock that doesn't look like it wants to stop going higher. I like Freeport-McMoRan. I usually don't even look below the index. Southern Copper looks like it might want to run, sort of setting up a high base here. I'd like to see it break out of that area before I get too excited. Cameco's a uranium play, similar looking stock. So we're finding some decent stocks. I like Freeport-McMoRan. Biotech. I'm not sure if I like Amgen as much as I like the next two. Amgen, trying to get above the 200. Earnings are out this week. I would pass. I do note that it's green on the bongo, had a pocket pivot, and it's got a blue kahuna. You want to see growth, you look at Tesaro, you look at Clovis. Both of them are acquisition candidates. They both have new drugs for ovarian cancer. Clovis is approved. Tesaro's may be even more exciting, but it's not yet approved. But they look good. And then Vertex, like Amgen, struggling at the 200, not as impressed. I don't know if anybody paid attention to me, but back somewhere down here, I said I might be buying Vertex here. And I thought it was closer to 100 when I said that. This one and Clara were two that I gave you several months ago. And you could see that United Therapeutics has had just a huge run, up 50 or 60% from that time, and Kira's done probably even better percentage-wise, but it's a cheaper stock. Cable and satellite, not a group I know much about. I know Charter was up because of potential discussions with Verizon. This is what happens when you have news. This is what happens on the last bar when the news may not be accurate. I don't think I start playing that. I've always been impressed with their growth rate. They don't pay a dividend. Comcast, nice move here, 1.4%. Liberty Broadband. Don't know much about this sector. Some of those stocks charts look like they're pretty extended. Semiconductor manufacturing, look at the first 3 or 4. Another strong group. What a beautiful, tight lower left, upper right. Looks like it wants to accelerate. This is Lam Research. Look at the earnings per share growth and look at the multiple. So here's what I like to look at gas in the tank. We're going to lose these two earnings, and we're going to replace them with these two if they make their number. $1.57 plus $1.18 is $2.60, $2.75. They're going to replace it with $4.95. That means there's $2.20 of incremental earnings coming in. $2.20 at $16. If the multiple doesn't change, the stock's going to go up to $150-ish. Won't the multiple likely go up as you've turned around from losing money to having big earnings per share growth? I think this stock is a screaming buy. I'd rather buy it closer to the 50. This is when I like to buy on pullbacks, especially when my weekly bongo is green. I think this thing fundamentally and technically looks good. Applied Materials, similar story. KLA Tencor, I don't like that doji there. Teradyne, nice group. Taiwan Semiconductor. Maybe this one wants to get ready to run. I really like Lam Research and Applied Materials. Next group down is steel producers. Big week for them. You got some earnings coming, U.S. Steel. So these guys have been great performers for me. I've talked about them several times. Remind me of the Bright Banks here. Sort of a, I'm not sure if it's a wedge, flag, whatever you want to call it, pennant. But pennant back down to the 50-day moving average. The bongo is still green. Had some kahunas come in. Look at the earnings per share growth coming in. You are taking away $2.38 in losses. You're only going to have 25 cents in gains, but you're taking away 238 in losses. Um, I think that U.S. Steel, if they meet their numbers and their revenue, will go higher. Obviously, I think it goes and takes out prior highs if its earnings report is decent. And yes, I have a position there. Steel Dynamics, numbers are out. Had a reversal on Thursday and Friday, trying to get back above the 200. They'll probably go the way of U.S. Steel with U.S. Steel's earnings. Allegheny Technology had a bobble gap up earlier in the week, not doing much since then. This is top-down investing. Private equity, why would you look at these? Because you look at the dividends. So Blackstone Group from 23 to 31, so it's up 30% since November, and pays a 5.2% dividend. Other one, the 9.8 on Icon. Oak Tree is 6.2, and KKR, pretty nice looking chart. Broke out here above the 50, tested the 50 nicely, getting extended. Everything is green, pays a 3.6% dividend. Industrial distribution. Remember my curve I show you how things go up and things come down? Sometimes they go back up again. United Rentals was a big leader when the market rolled over in 2014. This stock dropped from 120-ish down to 45. It's back up and took out its prior highs on earnings. Turnaround stock, what a great move. Multiple 14.73, does not pay a dividend. Let's see if anything here looks interesting. Lots of interesting stocks. And then lastly, Life Science Equipment, Thermo Scientific Fisher. Hard to get excited about this. Yes, it's had a couple big days. It's right below the PSR. That had a kahuna, but it's well below the 200. This one's interesting. Exact Sciences. Let's go to a weekly. They had a approval of a test. Ran up, pulled back. I think it wants to run again. Don't like the earnings trajectory. Doesn't pay a dividend. The chart pulled back to support. Testing on the 17-day. Everything's green. I think this goes higher. So I always go through that. I typically on the weekend go through a massive list of stocks as well. I have a couple of my favorite scans. For example, we start with an HGSI. $8,349 stocks. One of my favorite scans, which is in the software out of the box, is Sprinters. This identifies stocks that are both technically and fundamentally strong. And I start to go down the list and see if there's anything that looks interesting. Supreme Industries actually is a manufacturer of commercial coaches. I think they used to make some of the AMRACs, whatever they're called, in Iraq. Nice big move here, no dividend. I don't like the earnings per share growth. I think it's missed its time. Southern Peru Copper we looked at before, sort of a doji, not a doji sandwich, but up, down, up. Breakout above this could be bullish. Everything is green, good earnings per share growth. Nel Corp is in the same group as United Rentals. Earnings are not as strong. So this is one of the scans I like to do. My favorites, just in case you are curious, are the Sprinters. Ian's point score brings a lot of great stocks to the top. And then I look at certain things that are more technical in nature. So for example, I want to find stocks that haven't broken out yet, that are in a squeeze, and the price of the stock is right below the PSAR dot, so that a small trade up will cause a buy signal there, and gives me a place to set my price. So PRA Health is a research outsourcer for pharma. Gone sideways for a long time, had a kahuna, a couple pocket pivots. I don't like the red bongo, don't like the earnings per share growth, but it's sitting on in a squeeze, had a mobile breakout, a kahuna, and pocket pivots. And if it trades up, let's just pull that up here. So the PSAR dot is at 56.70. It closed at 56.55. If it closes up 20 cents, or moves up 20 cents, that's going to turn to a green dot underneath. That's a buy signal. And this is a stock that might be appropriate if I was in the market, if I was interested. Here's one that's down in the pattern. Similar story here. Mobile breakout from a squeeze. The bongo still red. Right below PSAR dot. I do like this one. This is Steel Dynamics. Pull back to the 50. A break above that PSAR dot would be very bullish. Here's another research company, another steel company. A lot of takeouts are in this group. One of the other scans I like, and then I'm going to probably say goodnight, is pullback to the 50. Which is free parking. So these are stocks that are in an uptrend. They're above their 200-day moving average, and they pull back to the 50, and I look for a bounce off the 50 with momentum. That might be a pocket pivot. It might be a kahuna. So a little bit of an uptrend, pull to the 50. Had a kahuna. I don't like this one. It doesn't look strong. I do like this one. Uptrend, sideways, sitting on the 50. Pocket pivot, a kahuna, mobile breakout from a squeeze. Everything is green. And Werner Trucking is one of the stocks on my buy watch list. Harris, I'd like to see it above the 50 before I get excited, but again, mobile breakout from a squeeze, pocket pivot, kahuna, sitting within 1% of free parking, the 50. So that's kind of what I do. I basically go through a number of different watch lists. I end up building a list that I look at every stock in the list, which is a little bit ridiculous, but it's how I spend my Saturdays. And I end up with, today I ended up with a list of 499 stocks. And what I've showed you are some of my favorites. My buy watch list is there if you want to stop it. We've looked at many of these already. These are the stocks that I'll be looking at the open, and I will be supplementing them with stocks that are moving either volume-wise or breaking out. This is how I trade. I might put opening ranges on them. I'll do different things looking for something that's happening. And I take a lot of trades. I mean, obviously, I had a great month in January. Hopefully it'll end a great month. I do a lot of trades. I don't care if I win every trade. I lose a lot of trades. I win a lot of trades. What I care about is my winners run, and my losers, I limit my losses. And even if I have a higher percentage of losers than winners, if I average 8 to 10% or less on my losses and 20 to 30% on my winners, I'm going to make a lot of money. And I play options, so sometimes the percentage of wins and losses look funny. But it's pretty much the same amount of dollars I'm willing to risk. For example, if a stock is $10 and I'm willing to risk $1, and I can buy a call at the money at $10 for 50 cents, then if that stock goes up, I make money. It has to go above 10.50 for me to be profitable. But if the stock drops to 6, all I lose is my 50-cent premium. So to me, I can control my loss. Now that's 100% loss of my premium. But if I bought the stock at 10, it would have been a 5% loss. So it's all math. 5% loss is 100% if it was premium. Um, I like the options. As I said in the beginning, options have risk. A lot of good stocks on this list. Highly, I recommend you do it on your own. I'll do a quick plug for John. Um, I come up with that list by going through a large list of stocks, and I'm just going to show you the types of things I look for. And let's look at these are some of the stocks that really look good to me on my final review. Let's take a look at Bluebird Biotechnology. This is a risky stock. It makes no money, but it's got some interesting gene therapies. Why did it make the list? On the daily, it's in a PPS buy. OBV is breaking above the moving average. The histogram is heading to the north, heading up. The VM indicator has crossed over to positive. On the weekly, it has a high closed doji. You can see the histogram's been getting more positive despite the stock being flatline. The OBV has dropped above the moving average. Both the daily, the weekly, the monthly bongos are positive. The only thing I don't like is that the VM indicator isn't more positive. I like Bluebird. If this was my stock of the week pick, then I would probably identify a price somewhere above its close, set my stop probably not far to the bottom of the high close doji day, or the lowest of the last 4 days here. Let's see. What was the low there? 64.65. My buy signal will be at 70.55, so it'll be about 9%, 8 or 9% stop. This is one that's interesting. Here's Freeport-McMoRan. This one's just running, pulled back this week. Still in a buy signal, weekly, daily and weekly. Electronic Arts, I like this one a lot too. High close doji, buy signal, all my bongos coming out of a squeeze daily and weekly. All the volume indicators are strong. The only problem with Electronic Arts is earnings come out this week. So, some of my favorite toys. So let's just take this one step further. I don't know when to shut up. Let's say I like Electronic Arts chart a lot. What does it typically do around this earnings? So I might pull up Seasonality Trader, and I might set this for Electronic Arts and earnings. Hold on. So set it up in earnings. Earnings would be coming January 31st, my birthday. Here's the earnings. So what happens? So we know this is interesting. If I wait, the earnings are typically up. So starting January 8th, it's been up 9 out of 10 years with an average return of 8.8%. So Electronic Arts might be something to think about going into earnings. Let's just look at the chart here real quickly. Uptrend, pullback to support, breaking out off the 50. The bongo went green, great earnings per share growth. I like that a lot. And then sometimes I'll go and I'll pull up Magenta Trader and just to have a second view of seasonality and see what that has to say. And the only thing I don't like about this is it's at the top of the channel. I'd rather be buying it off the bottom of the channel. Here's Big 10 and 0 is back in the summertime. But, you know, if I was to buy it from here, so look down here, I'm going to put it on today's date. It's up 6 out of 10, 13% average. We've got 4 returns that are less than 10%. I've got a couple of big whoppers. That's kind of interesting. I may be looking at Electronic Arts. All right. On that note, there's my dog saying, I want to go to sleep and get off your computer. Have a great weekend, or what's left of it. Great trading week. This is going to be an interesting week. I hope you've had a good year. I didn't show those returns or talk about them to show off. I did it because I have had a lot of questions from people saying, you put on nice webinars, but do you actually make money? And I think the answer is I hope you like my webinars, and I don't invest to lose money. I do it to make money. That's why I trade, and I hope you do the same. So have a great week, and we'll see you again in a couple weeks. Next week is Super Bowl. I probably won't be doing this. Good night, everybody.